You're listening to the Global Uj podcast, where every week we learn about the world through the eyes of entrepreneurship. With your host, Ujwal Velagapudi.
On today's show, we have Tarek El Sherif, the founder and CEO of Zinobe, a fintech company which uses its technology and advanced analytics to provide financial products for underserved markets. Zinobe was listed in Financial Times' fastest growing companies in the Americas and is number one in Colombia. They have raised $30 million in debt financing just this year from ex-Goldman Sachs executive Meli, and also equity in their prior rounds from VC firm QED Investors. Tarek is a New York-born, UK-raised, Colombia MBA grad who started his career as an investment banker. Enjoy our conversation. Tarek, welcome to the show.
Thank you very much. Glad to be here.
Thank you. So could you tell us a little bit about what Zinobe does, where your roots are from, how you guys exactly got started?
Sure. So Zinobe, as you said, is a fintech based in Colombia. We have been exclusively operating in Colombia for most of our life until this year, where we expanded to Mexico. And what we focus on is developing financial products for underserved markets. So we initially started focusing on consumer credit and trying to apply this data-driven model, which got rid of bureaucracy, made kind of the language more accessible, and also implemented a more inclusive credit scoring system. So a lot of these models were taking hold in more developed markets, and I think they were just selling themselves more on the speed and the user experience and kind of a different tone to communicate with customers. In emerging markets, it has all of that, but it has the inclusive angle as well. So, for example, in Colombia, the population is about 50 million people, and there's only 8 million people with credit cards. So we developed this product, which was kind of a revolver, so it mimicked a credit card, but without the plastic. That was a very short-term, more liquidity product. So ordinarily, that might compete with overdraft facilities or cash advances from a credit card, which are not prevalent here. So that was kind of our space to begin with. But as we grew, we had to develop our platform for this product, and we had to build it from scratch. At that time, there wasn't many options out there of third-party softwares that you could use. So through the years, developing this platform and building, different modules to accommodate different parts of the credit cycle, we started opening our mind to the possibility of, maybe monetizing the software more than the balance sheets. And I think that's kind of my view for kind of sustainability for a lot of balance sheet lenders out there. So we started selling other products, then talking with partners where we wouldn't be funding and selling just our IP. And then last year we launched an SME product, same methodology, that everything was online, data driven, again accessing kind of more underserved markets. And we partnered with the government they were providing us funding and guarantees for the loans. And then we got a chance to work with the government again this year as part of the kind of the COVID relief efforts. So our expertise in dealing with independent workers was brought to the forefront, because since it was an underserved market, and we were one of the key players in that market, and we were digital, which is even more important in these times where everybody's quarantined. It got us a very good opportunity to work with the government, got us a lot of good exposure. And I mentioned that we kind of expanded to another country. So this year also we formalized a joint venture with a large financial institution in Mexico, where we were going to be developing an SME product, so very similar to the one that we have here in Colombia. I think they're going to start giving out loans in the coming weeks, and it's 50-50 partnership where we're contributing just our IP, which is kind of validation for everything that we've built. So it's a big milestone for us. One is international expansion. One is actually monetizing our technology.
Wow, that's amazing. I mean, especially during this time to be able to work with the government in tandem. Is that how did that come about exactly? As far as your partnership with the government, was that in the works beforehand, or did you guys step up to the forefront and offer that assistance? And how has that been going, especially in the last few months?
So it was timing really that we got called. So we had communication lines with the government because kind of this fintech alternative finance sector is new and we're growing. So we've done over 1.5 million credits to date, and starting to get relevant. So we started opening these lines up just to introduce ourselves and introduce the concept of the business. It was important to get the policymakers and the regulators up to speed with what we're doing, because I think this country has low trust overall, and there were a few fraudulent entities that came about, pyramid schemes and so forth. So we want to kind of distinguish ourselves and let people know what we're doing and that it was beneficial for the economy. And then when kind of the pandemic hit and the government was deploying funds to a lot of the banks as a means to kind of put it into the population, I think they found that certain hard-hit segments, such as independent workers and small businesses, were not, getting those funds, and they were some of the hardest hit. So they reached out to us because they had understood our model and that we were going for these underserved markets. And so we were the first company selected, and the only company I think to date that's participated in this program with some of the banks as well. So it was very good milestone for us. I think any time that a newer company can do some type of partnership with the government is quite significant in any part of the world.
Oh yeah, in any market, especially. Can you go a little bit more into detail about exactly how that partnership worked? Because I know, having worked to a small extent with governments abroad, it can be difficult. Even where I am in the States today, it is very difficult. It is very slow. So especially when the pandemic hit, how were you able to roll that out so quick?
The slowness was overcome because of the kind of the sensitivity and getting things out there quickly, and the messaging that the government was helping as well. So, which is good and bad. I think it was good in that we could got the green light very, very quickly. But the bad part is that I think the initial product needed some tweaking in regards to maybe kind of risk appetite and tenor and so forth, because it was a little bit rushed, and it had a lot of different units in the government working together, and I think it was tough for anybody to kind of coordinate and communicate in time. And then I think there were deadlines on the PR side for the president to announce and so forth. But we've been working with them, to make some of those tweaks to make it have more impact. So they have been very, very responsive there. But I think, the speed was helped because they had to act quickly.
And you said you had to do a few tweaks. So was the product, do you think, ready for that scale, or did you still?
Yeah, so some of the tweaks are, so how the product worked is that the government really all they could provide, because liquidity was short, were guarantees. So because they were providing guarantees, they wanted to control that exposure. So they set some filters as far as, we knew it was independent workers and small businesses, and they set certain criteria of who qualified. And then they also set the maximum principal amount and maturity for the loan. And there was a little bit of a mismatch there as far as having loans maybe a little bit too small given the filters that we had on the credit that kind of filtered to a much safer client who maybe had more options. So the product was not as appealing as it should have been. So I think what we came back to them with is that, we could have gone, we can go either way. We can, do larger loans with these filters, or we could do smaller loans with kind of a loosening of some of these filters. So.
Okay. And about your products exactly. So you've got one that would you say is more of a B2C and another one that's more of a B2B?
Correct. And then we're mixing the two and going, B to B to C, in that, some of the small businesses, if they're customer facing, we're giving credits to their customers as well. So I think we're trying to create this ecosystem, and you have to try and squeeze out as much kind of revenue and value with all the relationships you get. If you're starting from a new and getting new clients that you have to pay for them, or you have to leverage partnerships, you have to be as efficient as possible. I think if it's a large institution with a huge client base, I think you can just throw out new products and test them. And but for us, we have to look for efficiency.
Okay. And so for me, let's say I'm a brand new startup, I'm in Colombia. Could I get funding, or what sort of documentation, what sort of application process do you guys go through? Because you said you reduce some of the bureaucracy, you reduce some of the requirements. So as a startup, what could I get? And then for an existing small business, how would that look like? Do I have to show previous revenue, previous tax returns? How does that look?
Yeah, so bureaucracy is more of a factor on the consumer side. So on the SME side, it's kind of a more open-mindedness to the risk assessment for that customer. So here, in a lot of the emerging markets, you don't have formality. And then because companies are not getting credits, there's a mixture of using personal accounts for business, and it could be quite, difficult to navigate. So if you are in a more formal institution, you'll naturally reject a lot of these clients that maybe aren't as formal, or where you can't really see the business, or the business doesn't come up to certain kind of minimum requirements. So having a more open-minded approach, having this blended score, mixing kind of consumer and SME data, can allow you to approve more people, and then also to open your mind to what data sets that you can use. So if you are targeting this segment where maybe they have to file their normal financials once a year, and they could be 6-9 months old by the time you're assessing them, and I think a lot of traditional institutions don't want to take that risk, especially if the numbers aren't that great and there could be some dramatic changes. So open your mind to using other types of data, such as bank account data, such as tax data, such as private transaction kind of purchase data, to get those trends that you need, that you can make intelligent credit decisions on. I think those are the differentiating factors. So I think we're flexible in how we can shape products and mitigate risks. So we don't have to, we're not stuck in one or two variables that are rigid, that a lot of the traditional institutions are.
Right. Okay. Yeah, that's interesting. And on the consumer side, would you say, because you mentioned there's only 8 million folks that do have a credit card, would you say the folks that are starting to get into the process of obtaining some sort of credit, do you think financial education, financial literacy is also a big component of that? Because I've seen in many Western countries where the debt to income ratios, the debt itself has been compiling significantly. So as a brand new, as a country in that early phase of obtaining that sort of credit, is that also a significant part that would you say falls more on the government, falls more on the consumer to be able to work towards that and obtain that education? Or what are your thoughts on that?
No, I think one of the key factors on the consumer side that is quite strong, that sometimes it's hard to overcome, is experience in credit and kind of understanding the process and having that discipline and so forth. So it is important to explain all the responsibilities and the liabilities to the customers properly. And we have educational modules within our platform where we're working with the credit bureau to introduce people to the score. And Colombia is unlike the US in that people, the concept of score is not that common, and people, I think, don't know how they're approved by traditional institutions. So we're working with one of the major credit bureaus to give them free access to the score, and then they can sign up for alerts and other benefits with the bureau separately. And then we also implement kind of a graduation gamification type of strategy where we start people off with smaller credits with shorter maturities, and then with history they get to grow with us. But I think we've been playing around with the educational component, whether to do it in-house or third party, since we started, because I think it's important for your messaging to appear that you're kind of a partner and that you're helping people, because in the credit game, it's all about retention and getting high customer satisfaction and keeping those customers and be able to sell them other products. I think if you're constantly churning customers and having to pay for new customers, it's not really a sustainable business. So that's where keep it simplistic. If you had a very high margin product, and you could look at the unit economics of one loan, and you could favor that over kind of a lower margin product. That's the wrong way to look at it. You have to look at lifetime value, and how do you get that lifetime value, making it affordable and making the person able to come back, want to come back, and feel kind of the value proposition strongly.
And so, in terms of that retention, how have you seen that play out since inception? I mean, especially on the consumer side, has that been going pretty well, especially since you said you start off small and then look at
so
the
we that's, I think, one of our differentiating factors in the market, especially for this type of product. So we have over 13 loans per customer. They're staying with us for 3 years, and most of the time we only had one product. We had an NPS, historically always between 78 and 80. So in the pandemic, it has gone down to 70, but that's understandable. But it's been for 7 years or so between 78 and 80, and we'll get it back very soon as well. And it has been one of the internal KPIs. So we focus on that. So I think you have to present a service to the customer, you have to deliver, and if you don't deliver, you have to own up and compensate the customer. So I think we've always had that philosophy that we want to treat the customers correctly and always deliver what we promise.
Right. And obviously, during the pandemic, you have partnered with the government, so customer acquisition may be a little bit different, but how was it pre-COVID, and then how do you think it'll look like post-COVID?
So pre-COVID, it's a huge market. So we're targeting kind of the lower middle class. So it's about 20-25 million people. Fairly cheap to get customers, and there was a need because of the lack of credit. What changed is that, let's say, for the core product, the consumer product, it is a kind of a general, liquidity product. And because of the quarantine that we've had, spending has gone down and it's more controlled. So there's no restaurants, no traveling, none of that free spending. So there's been more discipline. So I think what we've noticed is that a lot of our recurring customers, that slowed down a little bit, but payment behavior has been excellent, actually. So through the pandemic, and now the marketing cost is much cheaper. So we have one, let's say, negative for the business is some of the customers are not requiring this one product. but it's compensated by much better risk and much cheaper CAC. And then I think since we're also expanding right now and going into the more software business and partnering with other people, we're trying to kind of diversify our offering, so we're not just on this kind of short-term liquidity product and getting into other loan products with our partners, so that we can maybe graduate our customers further along from our offering, and then also not be so exposed to the pandemic.
Okay. And so when you say partnering up, so you mentioned you're essentially licensing your IP out to your partner in Mexico. How does that exactly work? And what sort of products can you add on to your software on the back end?
Yeah, so it's a joint venture where, the technology and kind of the online fintech experience side there, the Mexican operational experience and the resources. We hired kind of an independent CEO, and then one of the members of my team joined them there. So it's going to be an independent company, kind of leveraging the strengths of both partners, and that kind of we've been looking to do that type of partnership for a while, but because it does make sense. I think companies like us will have always benefits, against traditional players. So in that maybe that we're more entrepreneurial, faster, we have maybe more advanced risk metrics, better user experience, because we have to, because we're growing. And they will always have maybe a strong brand, deep pockets, cheaper funding, and maybe a big client base as well, that can be leveraged. So we're not really getting into the SaaS business where we just kind of have out-of-the-box solutions. We're kind of picking partners and kind of developing products together, either by them financing our existing portfolio, creating new products, or in some cases we're in discussions to do white label as well. But we manage all the operations. So I think it's not a simple SaaS, but it is leveraging that IP that we have.
Yeah, I really like that approach. I mean, is that your vision as far as expansion goes? Would you like to do that instead of doing it in-house in some sort of JV approach as you expand?
Yeah, I think it is scalable and sustainable, and to take it to the next level as a standalone company, in these markets where capital markets are not very developed, you're always going to have a disadvantage on the cost of capital. You're always going to have to working with fiduciaries and have all these excess costs as well on top of that. And then, you'll always have kind of some rollover risk that's going on. So we were lucky that we kind of funded our debt just before just at the beginning of the pandemic, and we'd already negotiated most of the terms. But if we hadn't, we had to kind of raise debt at this point, it would have been very expensive. So I think that it's a complementary partnership, whether it's partnering with an institution to give them a regional expansion, a product expansion, or a non-financial entity where they can add financial services as a component to their business where they didn't have it before. Mm-hmm. I think it's very beneficial for both parties, and it kind of leverages what we had. And instead of just being a software company, we are actually a player in the credit market. So all our software is battle tested and calibrated, right, and so forth. So it's an easier sell as well.
Okay. And so after Mexico, what other regions are you looking into, or what do you think makes the most sense, being in Colombia and then having touched Mexico now? What other regions of the world are you looking into?
So I think it depends. We have to be optimistic. It actually depends on partners. Since we're not going to be standalone, what would we want to fill? If we don't know market, we'd want somebody who has that presence in the market, maybe some operational experience, maybe a client base, and so forth, that we could come in and fill some of the holes. So we are, we do have, different offers, to look at in Peru and Costa Rica. Nothing that firm at this point. I think Peru a little bit more further along. But yeah, I think it depends on the partner, because even though this high level dynamic is very complementary, it makes sense. There's a lot of kind of soft factors, trust, culture, and so forth that you have to get right as well.
And can you talk about your experience with Mexico? Because that was, you said it was a JV, but as far as working with the government, with the fiduciary element that you had mentioned, how does that come into play, even with a partner? Let's say you've got your partner in Peru or Costa Rica. How does the political aspect, the government aspect, and the trust level with those entities, not as much the partner, but those other entities come into play?
I think we won't have direct government exposure as the same as we do in Colombia and Mexico. We're going to be, just in the private sector. But I think what's important when you're assessing different markets is the regulatory landscape and where those opportunities are, the data available, the payment behavior, kind of different cultural elements. Those are the things that we have to adapt to moving market to market. I think Mexico is a much deeper, more developed market with a lot more international investors. So the ability to grow and diversify there is much greater. And even on the funding side, I think there's more options here. Here, Colombia is quite restrictive. There's a peculiar tax which they have in Colombia, which is kind of 4/1000th, which is 4/1000th is taken out every time money leaves your bank account. So really? When you're looking to structure something, you have to take it into account. So everyone's kind of ending up using fiduciaries to eliminate that. So you can't be very creative. I think in Mexico, I think the securitization market is more alive, and there's more options for funding, and you can do kind of more engineering there than here.
And you talked about funding, just wrapping up the term sheet pre-COVID. And so can you take us back through which round was this? Did you bootstrap the business early on? Did you have seed funding? And where are we at today?
Yeah, well, the one before was to scale the portfolio. That was debt funding. On the equity side, initially had seed funding. So I'm lucky that I have a lot of a good network for seed investors. So I worked in banking, and so in New York and London. So I had a lot of friends that were interested in taking a bet with me. So it was fairly easy to get that seed funding. And then the rest of it, to get the more institutional funding, Colombia is a little bit tougher, especially that part. I think they've been success recently with some of the companies that have raised big rounds. But I think when we started, it was a bit of a wasteland, because the Colombian history is that it was a closed economy for a while, didn't have any successful startups or big international investment rounds. So we had to kind of bootstrap it probably for longer than we would if we were in Mexico or Brazil. But then things started to open up. We got a very good fintech investor, which in my opinion, kind of the best fintech investor in the world, QED Investors.
That was Ali? That was Ali?
Ali?
Ali Meli?
No, Ali Meli is the debt investment that we did in March. So the QED Investors was in 2018. So that was equity. So that was equity, and the other one was debt. And Ali is also another very smart guy. So Ali is ex-partner in Goldman Sachs. So because we're both bankers, I think, and my CFO is also an ex-banker. So I think it was very good. I think there is a little bit of a divide between kind of my world, kind of more East Coast banking, and kind of the West Coast startup world. But I think in the credit space, it's better to go with the more traditional approach, because I think it's more complicated business.
Mm-hmm. And so when did you actually start Zinobe?
We started operating in 2012, in June.
2012. And so since then, you've been primarily working on Lineru on the B2C side, and then recently had developed Aliatu.
Yeah, so the
Right.
government approached us in 2018 at the end of it to do a partnership. I think it was formalized in 2019, and that's when we started giving out loans. And then, the Mexican JV, it's under the name Centeo, was formalized in February, and it's about to start giving loans in the coming weeks.
And before we were chatting, you had mentioned that you had grown up in London. So how did you come to be sitting here today in Bogota?
It's the most common reason why any expats are here. So my wife is Colombian.
Okay.
But so we met, in the States. So so we lived together in Boston, then New York, and then moved to London. And initially, we just wanted to come here just for a short stint. But then when I started the business, it got longer than I thought. Yeah, I think we're planning to go to Brazil maybe. But I think now being away from London for a while can make me think that London is home. So that's probably where I'll end up at some point.
So you did spend time in the US. Is that where you had started your banking career, or is that?
Yeah. So I started in New York in banking. I was actually born in New York as well, but I only stayed there for a couple of years. So I've lived in New York, and I studied in New York as well. And then after I did my graduate degree, I went back to London and did banking again. But I was more on the kind of the coverage advisory side, and then I switched to the sales and trading side.
And so starting out, I mean, you had started Zinobe in 2012 in Colombia, and you had mentioned when we had started out, the credit structure, the ability to be able to raise, it wasn't the same as it is today. So how was it back then, and how is it today for, let's say someone down the block in Bogota or Medellin starting a brand new business and trying to obtain some sort of funding and raising from either the local ecosystem or globally? How would that look today?
No, it's dramatically different. So I think Colombians are very conservative by nature, and so the speculative kind of venture type investing and then valuations associated with it was not really something that was very developed. And so if you're speaking with family offices or funds here, they were speaking on a different wavelength to kind of, if you're reading stuff on TechCrunch and reading about investments valuations, it was very, very different. And then for international investors, Colombia was not on the map. There weren't really any big success stories. So probably the most dramatic change is a big delivery business called Rappi, which got a big SoftBank investment and so forth. And that was originally Colombian. And they were in Y Combinator. I think they started an avalanche of Colombians going to Y Combinator, and they opened people's mind locally to the possibilities. Because I think Colombia was very behind Argentina, Chile, Mexico, Brazil, obviously, the big ones. And then I think there's been a big catch up since then. So I think access to different investors is much, much better now. However, if your market is exclusively Colombian, you have to pick the right sector or the right business that can get the size that can attract the international guys. Otherwise, they'll push you to go to another country. So Rappi obviously is in. The most common thing is you have to go to Brazil. That's what they say. So I think our business, because it's financial services and it's quite large, you can make a business that's at least in hundreds of millions. And if you're successful, you can reach the billion. There, staying in that space. But if let's say you're an e-commerce player or delivery business like that, you're not going to be very big here. So you do have access to international, but most likely they'll push you to do a regional expansion.
That's so interesting. So you said, let's say I'm a local business starting off. I want to do something that is within Colombia that may not have the potential to really expand out. So those family offices that you were speaking to, the old money that's sitting within the country itself, and those larger investors, what were their wavelengths like? What was their mindset, and how do you think, or what do you think would take to really shift that trend?
I think there weren't really any success stories for them to kind of base any change in opinion. And what happens here, is very different to the US or the UK, is that valuing of talent and management is not very high. So they would ask for additional equity, and they thought kind of the investment or the cash was the most important part of the business, which it is not. and so changing that mindset and then valuing things on maybe startup metrics as maybe revenue multiples instead of cash flow and EBITDA. I think that was not a concept that they were comfortable with. They wanted more certainty. It was a very, very conservative country.
So it's more traditional investing versus
real estate, kind of fixed income, asset backed. So on the consumer credit space in Colombia, the biggest product is payroll lending secured by person's payroll, and within that, it's all concentrated on pensioners and teachers and people that cannot be fired. So it's not even a credit product as such. It's very very, very stable. And then on the SME side, it's factoring. And factoring only concentrated again in receivables from very large corporates. So it's so in the high risky spaces, it's all collateralized and all kind of very low risk. So I think that was good for us as well, in that we were doing an unsecured credit product in what they claim to be, what the market claimed to be a very high risk area, and then performing better than the market. So there was a study done by Experian on our database. So Experian is the largest credit bureau here, and so they looked at I think 600,000-700,000 credits that we did last year, and analyzed it by credit score bucket, in the scoring scale from 0 to 1,000, and they compared us to the market. And the market, even though it's primarily also this collateralized lending, was concentrated, I think 80% in scores above 680 or 675, and then our clients were equally distributed all the way from 0 to 1,000. It was kind of like 999 for the first few buckets. So it is completely uncorrelated. And then we had over 50,000 clients that were not even in the credit bureau, that we put them in the credit bureau through our history. So I think we've definitely created kind of a space here that we can protect, and we can work with people, and it's quite valuable.
So on the opposite side of that, in terms of talent that you had mentioned, when you started in 2012, who was your first hire? And then how difficult was that? And then having gone through the 8 years of transformation within the country and local environment, how is the environment today to be able to hire talented folks within your local market?
Yes, so it's still difficult. I think what I mentioned before, being a closed economy, means that was not as competitive. So kind of the service level is not as high. So if you get a lot of seasoned executives from here, maybe not as aggressive, not as sharp as you'd expect somebody in a more competitive market. So I always look for people who've worked abroad or studied abroad or had some kind of foreign exposure, particularly in the technology space, because you want them reading the media and knowing what's going on worldwide, because you want to have those standards, to be at an international level. And then, my first hire, I'll show you the example of kind of difference between my thinking as an expat and the thinking locally. In that I was working with a consulting company they were a credit score consulting company, because in order to develop your score, you need to have history. So I worked with these consultants to do our initial what they call expert score, and they were advising me in the beginning, since I just come to the country. my Spanish was even worse than it is now. And so we were interviewing candidates from the top university here. And there was a very traditional guy who worked in a bank and was very straight-laced. And then there was somebody who had worked in one of the mobile phone companies and was assigned. He was reporting to the CFO, and he was then assigned to the CFO he made him leave the company and then help him with his kind of prop trading strategy. So hold on a second.
Yeah, no problem.
So he had to learn investment strategies and come up with them by himself and pitch them to the guy and work it. And the consultants that I was working with recommended the straight-laced guy, obviously. And I said, I need an entrepreneur. I need somebody who can work by himself, teach himself something, and then do it. And then so he's been with us ever since, and he's leading our SME efforts
Really?
right now.
I love that.
So we have very good client retention, very good employee retention too. So my founding programmer is my CTO, and he's been with us since the beginning. So we've had a lot of people transitioning from, accounting to operations and to management and so forth, from customer service. I look for that international experience and exposure, and just to open your mind to things, because in markets that are quite stable, where there's not much movement, sometimes people don't have the imagination that things can change and be frustrated and act on that frustration. So I think if you've seen something else, it opens up your mind to what's possible.
Mm-hmm. And as far as global talent goes, is that, I know you had mentioned you would be working with a partner, but is that something where, let's say you do expand into Costa Rica or Brazil, some of these other markets, how would that talent look like? I mean, would you put a few members of your current team to go there and work on developing out that product in that country, or is that something that you would want to expand your talent pool?
I think just my strategy with talent is really to adapt positions according to that talent, and to be flexible there. So I think I would take advantage of anything I have internally to kind of expand their roles and their responsibilities and have them grow. And if not, I think we definitely need to have local guys for local markets, because they're all very different. I know from afar, people think of Latin America as just, one big country. And that's why kind of a lot of, the VCs push this regional expansion. Because they think it's kind of a slam dunk, but it's very each country here in Latin America is very, very different. Regulations and data, consumer behavior, competitive landscape, and so forth. So you really can't copy and paste. A lot of these businesses, especially in the credit side, the more complicated business, maybe just like that delivery business or anything where the value proposition is a bit more simple, you can expand faster. But there's so many moving parts in this type of business that you need to think about it.
And so, given your experience with the London markets, the New York markets, who do you go to? I mean, during this entire journey, who have you looked up to? Did you have a mentor during this process? And currently, what about your peer ecosystem? What about fellow founders that are kind of in the same boat with you? Is that an environment or a network that you can go to really right now within Colombia, or are you really leading that charge right now?
I think locally, we're much further along and we have more experience, especially in this space. I'm very fortunate that I do have, a good network of experienced business professionals and lots of companies doing very well from business school or from the banks. And I have one of my banker friends did the same business at the same time in Spain. So we kind of got to share a lot of experiences. And then I mentioned I have good investors. So I have the fund that I mentioned, QED Investors. I also have a very good investor in the UK who was has extensive financial service experience, was kind of the CEO of one of the challenger banks that went public, was the head of one of the biggest private equities financial services division, is a very experienced board member and multiple boards in different countries. So we were lucky there.
Right. Okay. And as far as expansion into or within the country itself, as far as the resources available to a brand new company that's just starting out, or a brand new person that's starting out, how, obviously with your experience being in New York and some of these Western markets, what else, or what is that extra thing or few things that Bogota can add, or even Colombia as a whole can add to its current ecosystem to get it a little bit closer to a New York market or a London market as it relates to the resources and the startup ecosystem and the mindset?
Yeah, I think I mentioned that one tax that really doesn't help small businesses at all. There's also very complicated accounting system and kind of legal environment. We had to, operationally it was inefficient that, we didn't have like TurboTax or some software that we could do for accounting, because accounting is so complex and not intuitive and not related to the business. You had to have a team there separately handle that. And then the legal environment is very burdensome. I had to have a lawyer and retainer very, very early on because you had to respond to all these requests, which we've never lost, but it takes a toll, and it's very bureaucratic there. And then I think incentives that the government can do on the tax side, on maybe on the investor side, to incentivize investments, I think would be good. I'm not in favor of a lot of the plans that they have here and they have in other countries where governments are doing investments in startups, because I don't think those end up very well. There's too much, different interests involved there. But I think if you have kind of blanket exemptions from regulators, from taxes, and incentives for investors to come in, especially foreign investors, I think those could help things a lot. I think eliminating the bureaucracy and eliminating kind of the operating burden that you have in a lot of the Spanish-speaking LATAM countries would help a lot. I think the Anglo-Saxon infrastructure is just so much more efficient, and it can be online, and here that we have to go to the notary so often. There's just little things which add up.
And so for someone starting off, let's say in Colombia, what advice would you give them as far as how to approach it, and how to, let's say they do have a brilliant idea, how to approach getting the most out of the available resources that they have within the country? And is that something that to utilize the available resources within the country, or to be able to go abroad, like you were mentioning about picking a certain business model that can be global? What sort of advice would you have for someone that's just starting off and looking to start up?
Yeah, I think it's very important in any country, I think, to project long term, because you can have kind of product market fit validation that will work at a small scale, and you have to see where you're going to end up. Where does this go at the end, and can you protect your position? Are you going to build something that really is defendable? I think those are very important questions to ask. I think people get excited by just having some customers initially, or having very small success, but you really need to kind of project out where's it going to go, who you need to partner with, because or if you need to go abroad or not, because it'll shape how you grow the business and kind of what investors you have as well. Because if you do want to work with VCs, then they're going to push you a certain direction. If you do want to stay local and maybe concentrate on having a very, cash flow positive, profitable business, but on the smaller side, which is good business, that's one thing. But if you want to have something that's more high profile with maybe a high valuation but no cash flows, that's another strategy as well. So I I think you need to think of where you want to go and who you should partner with, and then also what sector to go in as well.
Right. All right. Thank you so much again, Tarek. I love the feedback, love your mindset on also how to hire talent, what you're looking into as you expand, and utilizing all the resources that you have available. If anybody wants to get in touch with you, what's the best method to be able to reach out, say hi?
Well, actually, like you did, LinkedIn is. I'm sometimes a bit slow on that, but LinkedIn works.
Okay. All right. Thank you so much again, Tarek El Sherif, the founder and CEO of Zinobe. Thank you.
Thank you very much. Pleasure.
Thank you so much for listening to the show this week. Please do leave a comment on your thoughts about today's episode, and make sure to hit subscribe to get the latest on the Global Uj. Or if you already have, please share with a friend that you think might enjoy it.